Welcome to Money Minds. Did you know that the Nasdaq 100 and the S&P 500 are two of the most popular stock market indices in the world? But what exactly is a stock market index? Think of it as a barometer for the stock market. It's a tool that investors and analysts use to track the performance of a group of stocks and, by extension, the health of the overall market. The Nasdaq 100 and the S&P 500 are in this. The Nasdaq 100 tracks the 100 largest non-financial companies listed on the Nasdaq. Think big tech here. With companies like Apple, Microsoft, and on the other side of the ring, we have the S&P 500, which includes a wider pool of 500 of the largest companies listed on either the NYSE or Nasdaq. While both indices track the performance of large companies traded on U.S. exchanges, there are some key differences between the Nasdaq 100 consists of the 100 largest non-financial companies listed on the Nasdaq Stock Exchange. It's a compact yet powerful index that captures the essence of innovation and growth. And while it may be smaller in number compared to other indices, the Nasdaq 100 is certainly not short on influence. The Nasdaq 100 is a unique index in its focus. It's heavily weighted towards the technology sector, making it a beacon for those who believe in the power of innovation. This isn't an index where you'll find old-school industries. It's the home of the disruptors, the game changers, the digital pioneers. We're talking about companies that are shaping our future right now. This focus on technology is no coincidence. The Nasdaq exchange itself was born in an era of technological advancement as the world's first electronic stock market. It was a revolutionary concept that attracted revolutionary companies. And today the Nasdaq 100 continues to reflect that spirit of innovation. When you peek inside the Nasdaq 100, you'll find names that are synonymous with technological advancement. Giants like Apple, the titan of consumer electronics, Microsoft, the cornerstone of enterprise software, and Amazon, the leader in e-commerce. These are not just companies, they are cultural phenomena that touch nearly every aspect of our lives. But it's not just about technology. The Nasdaq 100 also includes companies from other sectors that are leading in their own right. From biotech pioneers to telecommunication giants, the index is a showcase of modern corporate America. The Nasdaq 100's focus on technology and growth has made it a favorite among many investors. These investors are not just betting on companies, but on ideas, on progress, on the future. They see the potential in the digital revolution and want to be a part of it. So if you're someone who believes in the power of technology, who sees the future in code and silicon, who gets excited about the next big thing, the Nasdaq 100 is more than just an index. It's a reflection of that belief, that excitement, that vision. The Nasdaq 100 is heavily weighted towards the technology sector, making it a favorite for tech-savvy investors. On the flip side, we have the S&P 500, which includes 500 of the largest companies listed on the NYSE or Nasdaq. The S&P 500, also known as the Standard & Poor's 500, is one of the most widely quoted American indexes because it represents the largest publicly traded corporations in the U.S. Unlike the Nasdaq 100, which is heavily concentrated in technology companies, the S&P 500 is more diversified. It includes companies from a broad range of industries, including technology, yes, but also healthcare, consumer goods, energy, finance, and more. This wide-ranging sector representation gives the S&P 500 a more balanced and comprehensive view of the U.S. economy. Now, let's dive a bit deeper into the composition of the S&P 500. It is a market capitalization weighted index, meaning that the weight of each company in the index is determined by the total market value of its outstanding shares. The larger the company, the more weight it carries in the index. As a result, movements in the prices of stocks of larger companies have a greater impact on the index than those of smaller companies. This diversification is what makes the S&P 500 a popular choice for investors seeking a broad exposure to the U.S. stock market. It's like a one-stop shop for those who want a piece of the American economic pie without having to invest in each company individually. However, it's important to note that while diversification can provide a level of protection against volatility, it doesn't guarantee profits or protect against losses. The performance of the S&P 500 can and does fluctuate. To sum it all up, the S&P 500 is a broad, diversified index representing the U.S. stock market. It's considered a benchmark for the U.S. economy and is often used as a gauge of the health of the market and the U.S. economy as a whole. The S&P 500 offers a more balanced portfolio, making it a popular choice for those seeking diversification. Now, let's talk about performance. Who's the top performer, Nasdaq 100 or S&P 500? To answer this, we need to delve into the recent past. Both indices have shown significant growth over the years, but the story gets more intriguing when we break it down. The Nasdaq 100, heavy on technology stocks, has shown stellar performance. Think about the tech giants that dominate our everyday lives: Apple, Amazon, Microsoft. These companies have seen massive growth, and being part of the Nasdaq 100, they've pulled the index up with them. In the past decade, the Nasdaq 100 has consistently outperformed the S&P 500 thanks to this tech boom. But it's not all roses. The Nasdaq 100's heavy reliance on tech stocks can also be a weakness. When the tech sector takes a hit, so does the Nasdaq 100. It's like putting all your eggs in one basket. Sure, it's a pretty strong basket, but it's still a single basket. Now let's shift our gaze to the S&P 500. This index is more of a mixed bag, featuring companies from a range of sectors: technology, healthcare, consumer goods, you name it. Yes, it hasn't shot up as dramatically as the Nasdaq 100, but it has shown a steady, reliable growth pattern. This diversified nature of the S&P 500 brings about a kind of stability. Imagine it as a well-balanced portfolio. When one sector faces a downturn, the impact is cushioned by the performance of the other sectors. It's like having your eggs in different baskets. One basket might have a bad day, but the others could still be doing just fine. So, while the Nasdaq 100 might grab the headlines with its high-flying tech stocks, the S&P 500 continues to chug along, offering steady, diversified growth. However, during market downturns, the S&P 500 tends to be more stable due to its diversified nature. That's something to keep in mind when comparing the performance of these two titans of the stock market. So, which index is right for you, the tech-heavy Nasdaq 100 or the diversified S&P 500? It's a question that's been asked by many, and the answer isn't a simple 1-2 punch. It's a complex decision that hinges on your individual investment goals and risk tolerance. If you're the kind of investor who likes to ride the wave of technological innovation, the Nasdaq 100 might be your go-to. It's a playground for tech enthusiasts, boasting some of the world's most innovative and successful tech companies. With giants like Apple, Microsoft, and Amazon leading the pack, this index offers the potential for high returns. But remember, with great potential comes great risk. The tech sector can be volatile, and while the highs can be exhilarating, the lows can be a real gut punch. On the other side of the coin, we have the S&P 500. This index is like a well-balanced meal, offering a taste of various sectors. It's not just about technology. It's about healthcare, consumer goods, and a host of other industries. It's a smorgasbord of opportunities that can provide a stable and diversified investment option. If you're the kind of investor who likes to spread the risk and prefers a steady ride, the S&P 500 might be your cup of tea. Both indices have their unique advantages. The Nasdaq 100, with its tech-heavy focus, can offer exciting growth potential. The S&P 500, with its diversified nature, can offer stability and a hedge against sector-specific risk. But here's the thing. There's no one-size-fits-all answer here. Your investment choice should reflect your unique financial situation, your goals, and your risk tolerance. So whether you're captivated by the allure of tech giants, or you're a fan of diversified investments, the choice between the Nasdaq 100 and the S&P 500 is a deeply personal one. It ultimately depends on your investment goals and risk tolerance. Both indices offer unique advantages and have their own strengths. To recap, both the Nasdaq 100 and the S&P 500 are popular stock market indices, but they have key differences. The Nasdaq 100 is a collection of the top 100 non-financial companies listed on the Nasdaq, with a heavy emphasis on the tech sector. Think Apple, Microsoft, Amazon. On the flip side, the S&P 500 is a more diversified index, tracking 500 of the largest companies across various sectors such as technology, healthcare, and consumer goods. Performance-wise, the Nasdaq 100 has generally outperformed the S&P 500 in recent years, thanks to the tech industry's stellar run. However, in times of market turbulence, the S&P 500 typically offers more stability due to its broad sector representation. Understanding these differences can help you make more informed investment decisions. Remember, the right choice depends on your individual investment goals and risk tolerance. Alright, that's all for today's showdown between the Nasdaq 100 and the S&P 500. We hope this has given you some insight into these two major stock market indices. If you found this video helpful and want to continue learning about the financial world, be sure to hit that subscribe button. We regularly release content just like this to keep you informed and help you navigate the complex world of investing. Remember, while we provide information and guidance, it's crucial to do your own research and consider your own financial goals before making any investment decisions. Thanks for watching. And don't forget to hit that subscribe button and the bell icon to stay updated. We'll see you in the next video. Happy investing!